In this case, I will explain to you the concept of interest on calls in arrears. So what happens is, let's say, suppose there was a gentleman X who was supposed to pay 4 rupees per share on 20,000 shares on 31/1/2011, and he actually paid this on 31/3/2011. Now, a company can charge interest on calls in arrears from the shareholders. So what happens is that the company will say, look, you had to pay me 20,000 into 4, 80,000 rupees, okay, on 31/1/2011. But you didn't pay it to me for 2 months. So what will happen is, now you have to pay this 80,000 to me. Along with this, also pay me interest for this delayed period. Okay? So the question comes up is, how do you compute and what is the rate of interest? There could be two cases. If nothing said in Articles of Association then basically you can charge maximum of 5% per annum. And if it is specified in the Articles of Association, then you can charge as per that rate. Or it might have given the directors the power to decide on this amount. Now in both these cases, on 31/3/2011, when you get this call money of 80,000, you will also get interest. So let's say you've got 80,000 at the rate of 5% for 2 months. So how much that will be? 80,000 into 5 divided by 100 into 2 divided by 12. Why? Because you have to charge it for 2 months. 6, 3, 400. So this basically becomes 2000 upon 3, or somewhere around 666.67 rupees. So let's round this off to 667 rupees. So on 31/3/2000, I will receive the money on account of call. How much was that? 80,000. Plus I will get the interest of 667. So the total amount I receive is 80,667. 2. First is interest on call arrears. What is the reason why I got this money? 667 I got on account of interest on call arrears. So this is my income. Income when received is credited, so I credit interest on call. 2. Calls in arrears. Why call in arrears account? Because obviously once you did not receive this money on 31/1/2011, you would have debited the calls in arrear account. Okay?